All right, Rob, I think you should be on stage. Let's see if that is working out. Yeah, loud and clear. Hey, Rob, how's it going?
Awesome. Yeah, good, man. And yourself? How are you?
Yeah, pretty good. I'm going to miss the Amazon delivery man, so I might get distracted by the ringing. But, yeah.
Got those Ring doorbells where you can actually see them?
No. I'm living here in very rural Germany that is high tech, far away from what we have available here.
No worries.
Yeah, all right. We are at the 5 o'clock mark. So, yep, I think we can get started. So let me do the introduction here really quick. Welcome everybody to Buildsphere 18. Today we are joined here by Rob from Deepr. And yeah, Buildsphere is the format where we are going to showcase the protocols that are building on IOTA, and you get a chance to ask your questions. We have a bunch of questions collected already, and also there will be a chance for everybody to raise their hand, get on stage, and ask a question directly here live. Alternatively, you can, of course, drop them in the comments, and we'll try to pick them up. If you have a project that you want to see here featured on Buildsphere under every original thread that is announcing a Buildsphere, there is a very brief and short Google form, very painless to fill out, promised, and then we'll have you here on Twitter, X, hopefully someone soon. Yeah, I'm your host, Jonathan, and with that, let me pass it to you, Rob. Let's start out with an introduction for those who don't know you yet and the role that you play at Deepr.
Yeah, of course. So I'm Rob Dakin. I'm a co-founder of Nakama, and Nakama is a Web3 development firm in which we develop applications. And the first application that we've launched solely on top of both Shimmer as well as IOTA is Deepr, which is a lending and borrowing platform. A little bit more about myself. So I spent roughly 15 years in traditional finance, working in private equity, fund administration and management. I got interested in crypto, more of accident actually. Got interested in crypto in 2015. I was trading virtual game items for a game called Counter-Strike on Steam for Bitcoin because I've always been a bit entrepreneurial. And I was trading my virtual game items of Bitcoin and then converting it to fiat, which was a mistake at the time, but it was a good learning experience. Fell down the deep rabbit hole when I learned about Ethereum and smart contract capabilities. Became really interested in IOTA. Probably about 2016, I learned about IOTA before it was on centralized exchanges. But I only first made my investment when it listed on Bitfinex in sort of mid 2017. I was really interested in the concept of feeless peer-to-peer transfers. Got interested in decentralized finance with smart contracts through Ethereum with a application at launch called Etherlend that turned into Aave in 2017. Got interested in DeFi summer when the likes of Compound launched, IOTA Finance launched, a bunch of food tokens launched that were ultimately very much a scam, and became interested in advising and developing in this space. So I co-founded Nakama with our partners, and we've been looking to develop a range of decentralized finance applications, of which Deepr is one.
Awesome. Yeah, thanks for that. Also happy to tell you that, of course, this has been a very anticipated Buildsphere. We have seen quite a lot of discussion surrounding Deepr, and probably a lot of people are somewhat familiar with the protocol already. But just to make sure that everybody is on the same page, I think we should cover some basics first. And probably we should start with what is a money market or a lending protocol?
Yeah, sure. So money market is essentially like a lending and borrowing market. It aims to facilitate lending and borrowing on a short term to medium term basis. And the way that Deepr works, because it's within an application within decentralized finance, is that users that want to borrow money also have to lend money. So the example I could give is that, let's say a user has, say, $10,000 worth of IOTA. They could lend that to the market within Deepr. And then if they choose to, they could use that collateral to collateralize a debt position. So, for example, they might want to borrow, say, $1,000 worth of USDC to pay maybe some expenses, but they don't want to sell their IOTA. They therefore have a over-collateralized debt position now because they're collateralizing that debt position with $10,000 worth of IOTA for $1,000 worth of USDC. Just you need to be mindful that your debt position always has to be over-collateralized. I'm sure we'll probably talk on this a bit later, but essentially you have to monitor the price of IOTA against your USDC position so that you're always over-collateralized. Otherwise, you run the risk of being liquidated to repay the lenders.
Yeah, fair enough. Great explanation there. So yeah, you're pointing out something very crucial here. Of course, if you're collateralizing an asset and it should go down, so yeah, that will risk your position, but we will indeed chat about the risks and benefits a little bit later. So I want to invite everybody to actually go to the website, Deepr.finance. Always great to have the website in front of you. Helps to visualize things and contextualize them a little bit. So I'm on the webpage right now. I'm looking at the supply markets, and with the example of wrapped IOTA, I'm seeing two API stats. Can you explain how that is coming about?
Yeah, of course. So one is the APY that you're going to receive in IOTA for lending that asset. And that's a variable APY based on the demand of the asset. So right now, there's a lot more supply of IOTA in comparison to IOTA that's being borrowed. And that isn't a huge surprise to us because we're operating on IOTA, and the majority of users on this application right now, I suspect, are IOTA users who have a lot of IOTA to supply and are probably more interested in borrowing other assets. So the 0.05% is the rate of interest that you're receiving in IOTA based on the amount of wrapped IOTA that is being borrowed. The other APY there, which has a little symbol, has a little Deepr symbol next to it, is a incentive. So there's an incentive for lending IOTA in Deepr tokens. So this is also variable, and it depends on the price of Deepr and also the amount of users that are supplying that market. Right now, you can earn an additional 2.34% in Deepr tokens per annum. But bear in mind, this is variable based on the amount of people that are supplying to that market, as well as the price of Deepr. So, for example, if the price of Deepr goes up tomorrow, the APY will go up on the assumption that there's no more people lending their assets into that pool. Another example could be that if the price of Deepr goes down, that APY in Deepr will also reduce.
Yeah, makes a lot of sense. Another function that is very prominently featured on your website, can't miss it when going there, is of course the Lighthouse. So that is a very interesting feature I have not seen on any other money market. So yeah, I'd be interested to learn what is that about.
Yeah, basically, we wanted to make the website as user-friendly as possible. We wanted it to be really clean, very user-friendly. And so we were thinking of how we can have a visual aid for our users when they're borrowing assets in particular, so that they can monitor the amount of collateral that they have in comparison to their debt position. So this is really a visual aid to guide users to ensure that if they're getting towards a more risky position, then they have a few options. Maybe we'll talk about that a bit later, but the few options available to them could be that they could repay some of their debt, they could increase the amount of collateral, or a third option, which we don't recommend, is they could risk being liquidated, but there's a penalty fee to being liquidated.
All right. Yeah, that is the Lighthouse. So we have been having Cyberpurp on last week, and they are a leverage trading platform. I think it is worth pointing out, though, that leverage can also be obtained through a money market. So yeah, can you walk us through the process of how would one leverage their position using Deepr?
Yeah, of course. So probably the best way that I can explain it is to give you maybe an example to walk through. So the example that most users will probably have is if they have IOTA, which they don't want to sell, they could use that IOTA as collateral within Deepr, and then you could borrow another asset. For example, they could borrow ETH, or they could borrow USDC. and then they could use that ETH or USDC to purchase more IOTA, for example, on a decentralized exchange. By doing so, they're essentially leveraging up their position in IOTA. And if you want to be even more risky, you can potentially leverage up multiple times, because you can loop those same assets in IOTA back into supplying as collateral to borrow more ETH or USDC. I'd only recommend that for advanced users who are, used to monitoring their sort of collateral position within decentralized lending and borrowing markets. But that's a way that you can leverage up. The alternative is that you can, so that's a long position leverage. You can also take out short position leverage as well. So for example, if you have, say, USDC, you could use that USDC as collateral within this lending and borrowing market. You could then borrow either IOTA or Ethereum, and then you could sell that IOTA or Ethereum on a decentralized exchange. That's effectively taking out a short position and leveraging your position within DeFi.
Yeah, great. Let's explore that a little bit more. So obviously, a money market is a very essential cornerstone of any network. I like to think of it as a Lego brick that is fitting well with other protocols out there. I feel like whenever there's a protocol launching, people view it somewhat isolated without taking the larger ecosystem into account. So yeah, I'd be interested to exploring some ways where we are starting out at Deepr. We take a loan, and then of course opportunities are opening up. So I'd love to explore your ideas in this direction. So let's say that I take out a loan on Deepr and want to do a very low risk strategy. Let's say without a liquidation risk, we are going to ramp up the degen a little bit as we move, but a low risk strategy should involve like no risk of liquidation. I can walk away from the computer for months and come back. Everything will still be intact. Anything in this direction would be interesting to hear.
Yeah, sure. I guess the lowest, well, not I guess, the lowest risk strategy that users could take up is that within Deepr right now, we have a limit that you can borrow up to 50% of the collateral. That's to ensure that we mitigate the risk of both user and platform. And you could potentially borrow the same asset that you're lending. And the reason why you might do that is if we take, I don't know if people are still within the Deepr Finance dashboard, but if you're in there, if you look at the supply markets, if you were to lend USDC right now, you would earn 2.37% in USDC. And then if you borrowed USDC, you'd pay 9% USDC. And you might wonder why you would do that, because effectively you'd be paying roughly, let's just say 7%. Let's round those numbers off, 7%. The reason why you might do that, and it's a bit more degen, is that you're going to be earning additional rewards in Deepr tokens. So at the moment, you'll be earning 14% returns in Deepr tokens on USDC for lending, plus 2% on the borrowing side. So effectively, you're going to be earning more in Deepr rewards, and you'll be paying interest on that loan for essentially lending and borrowing the same asset. The protocol benefits over the shorter term because we need to bootstrap liquidity into our supply markets, and we need more USDC right now. So we are incentivizing that market. So you do need to keep an eye on the incentives, because at some point we might tweak them if we get to a point where we feel like we've got enough USDC within that market. But over the short term, there's an opportunity there for people to essentially arbitrage and create a DeFi strategy, which is very low risk, but grants a return for those investors. In regards to using other applications, I've made this analogy before. I don't think it's my analogy. I think I stole this from someone. Apologies for the plagiarism. But I remember hearing someone talk about DeFi like it's Lego. Essentially, you're trying to build a house or a structure, and each application is like a brick. And I consider like Deepr as a lending and borrowing market to be a really important brick within the puzzle, within the Lego structure, because Deepr can be used to create leverage. It can be used to lend assets to receive a return on those assets. It can also be used within DeFi strategies, or just short term because you don't want to sell an asset, but you need to borrow some funds to pay maybe your rent or expenses, but you don't want to sell maybe your Ethereum or IOTA to do so. Deepr provides that functionality in a really efficient manner, which is available within traditional finance, but it's not nearly as efficient as it is in this form with Deepr.
Yeah, reasonable. I mean, I'm very stoked to see what kind of synergies are going to develop with all of the projects still coming up. Before we move on from this topic, is there any high risk, high return strategy? Of course, we are not recommending it, but hypothetically, what would be the most risk averse strategy that somebody could drive using Deepr?
I think that the highest risk is that you're looping strategies back in. So for example, I think I gave an example earlier where you could use IOTA as collateral to borrow USDC, and then you could use that USDC to borrow more IOTA to use as leverage, and keep on looping that strategy, so that you have like more than a 2x leverage, for example. That's pretty risky. It's pretty risky, but it can also attract like higher returns, because if the price of IOTA increases, then your returns will subsequently increase as well. And you'll also earn more rewards from the platform because you're gaining more rewards for the same amount of initial collateral, although that collateral is more at risk. Another strategy which is more higher risk is you could potentially take out a loan position from Deepr, and you could use that within another DeFi application. If I take, say, Magic C as an example, you could then maybe use the amount of money that you've taken as like a borrowed position, and then you could buy maybe a liquidity position within Magic C, which is perhaps high risk, but is earning you a higher return on top of Magic C as well. And this is where you can kind of connect the two applications or multiple different applications within DeFi to create more riskier, higher return strategies. It's not to say that every time you link Deepr into another application, it's much higher risk, but it does add an element of risk, even just with the smart contract risk to consider.
Yeah, that is totally fair. I mean, of course, it is not really advisable for most people to drive the most risky strategy available, but certainly helpful in understanding how these protocols work, how they interconnect. And yeah, of course, you're totally right with pointing out that maybe there will be opportunities where it is definitely a savvy move to take out a loan, to deploy it somewhere else. Can make sense in instances. So yeah, very excited to see that Deepr is starting off on such good terms, and yeah, interesting to see how it will be integrated in the protocols to come. Yeah, let's throw the Deepr token into the mix. That is, of course, a question on a lot of people's mind. We are going to get to the community questions as well. They are leaning into that. But yeah, I think walking us through the utility and some loose tokenomics would be a good start to help our understanding.
Yeah, of course. So I guess if I start with utility, then I'll touch on tokenomics. In regards to utility right now, if you provide liquidity on top of Magic C, you can earn rewards in both Loom tokens as well as Deepr tokens for providing that liquidity against Deepr and IOTA. Other forms of utility, we have opened up staking of Deepr on top of IOTA now, so you can earn a small reward in Deepr tokens for staking those tokens and essentially taking it out of the immediate ability to sell those tokens. Although longer term, we've got visions for the Deepr platform. We want to be looking at opening up governance in the future so that users can vote on additional markets that they wish to see, or adoption of certain assets, or they could, within reason, vote on the structure of those markets, so they could make certain markets maybe more expensive or less expensive that might return more fees. In regards to fees, we are looking at sharing fees with our users, particularly now that we've had a successful launch on top of IOTA EVM. We're looking at how over the the medium term, we can convert our staking contract, which right now is paying out in Deepr tokens, to convert that staking contract to pay out in fees from the platform, or potentially we might look at maybe a buyback and burn scheme using those fees so that users can directly benefit from the fees from the platform. In regards to the tokenomics, the total number of Deepr tokens over the lifespan of the smart contract token deployment is 1 billion Deepr tokens. When we launched on top of Shimmer, we had a emission schedule, and Shimmer was successful in the sense that we were able to test our application and make sure that it was very safe and that it's all functioning correctly. However, Shimmer didn't have enough liquidity for us to fully open up our lending and borrowing markets and to attract a huge amount of liquidity. So we did strap the amount of tokens that we were using to incentivize a small amount of liquidity and borrowing positions on top of Shimmer, which we're now reversing. So we're now ensuring that there's more Deepr tokens that are being used to incentivize those lending and borrowing positions, because we don't have to have as many restrictions as we had on top of Shimmer, which is positive for the platform. In regards to like the percentages that we were issuing with the token, there was a very small airdrop which represented 0.1%. The vast majority of our token supply is aimed at the community and incentivizing liquidity incentives, both within the Deepr lending and borrowing markets, but also within DEXs and perhaps centralized exchanges of 62.4%, which is extremely healthy for a lending and borrowing market. The team have been allocated 20% share of the tokens. This is vested over 3 years, and I can say to date, none of those tokens have been sold. Treasury of 5%, which can be used to help in campaigns and projects that we want to work on. Partnership allocation of 7.5%, which we haven't allocated yet. We're still in discussions with a number of different partners. And there was an initial liquidity offering, which was highly successful on top of Shimmer C, on top of Shimmer, of 5%. The offering price of the initial liquidity offering was 0.0036 cents. So we're operating at a higher price than that initial liquidity offering, and we're very hopeful and positive on the price action of Deepr in the future as we roll out new products and build up the amount of liquidity and lending positions on the markets.
Right. Yeah. So that is the Deepr token explained. As I've been looking through the website, I have also come across an option to mint a Subie. Didn't work out for me, unfortunately. So I'm wondering, what are the requirements there? Is the mint still live?
It's kind of live. It's funny you raise that. It's something we might need to look at from a UI UX perspective. We had during the Shimmer launch, particularly on the testnet, we launched a NFT called the Subie, and the Subie was the first randomly generated NFT collection on top of Shimmer, and users that were testnet users or aided us in our launch on top of Shimmer received a code. Well, not a code, they received a token that they could essentially redeem for an NFT. So that's only available on the Shimmer network. We've kept it live because there's still users that haven't claimed their Subie NFT on top of Shimmer. The utility of the NFT was that they received a small airdrop of Deepr tokens. This has gone back several months now. But the main utility of the platform is with the token holders.
Yeah, that sounds like I missed my chance there. I mean, if any of the people out there who are still sitting on an unredeemed token, yeah, let me know. But other than that, yeah, I think it's time to talk a little bit about the future plans. And one of the questions that has been on a lot of people's minds is whether you are planning to enable more assets than ETH, USD, and IOTA. And then, yeah, what considerations are you making there? Like, is there a process? Can anybody apply? Are you making that decision? Yeah, that would be interesting to know.
Yeah, for those that know me well, I'm really conservative when it comes to decentralized financial applications. I want to make sure that, the protocol is safe and no one's losing money. And that's why, we have been, a bit slower than maybe some people would have liked to launch, but we've had a really successful launch once we've launched, because I think people trust us, and we need to ensure that we continue to earn that trust. And so when we look at other assets, there's many things that we look at. We certainly will consider other assets, but they need to be very much like AAA assets that have, low volatility, lots of liquidity, lots of volume, particularly if they're traded on centralized exchanges, or can be redeemed, 1-for-1 for a US dollar and have low volatility. Then we'll certainly look at those assets and look to include them within the market. We're currently using PIF Oracle services, so we're able to get pricing data on these three assets, being IOTA, USDC, and Ethereum, and that makes the markets very secure. If people were asking if we could maybe accept, say, like the Deepr token or the Loom token, which we value very highly with our partnerships, and because we launched a Deepr token, those tokens right now, because they're not traded on centralized exchanges and because they don't have the kind of volume and liquidity that, say, IOTA and USDC and Ethereum have, we're not able to support them, at least over the short to medium term. Over the long term, if we get, and we hope to have, wide scale adoption of these assets, then we can look at potentially supporting them in the future. Another thing that we look at as well is how the tokens are structured. Are they audited? Do they have a good team behind them? So there's like the team, volume, liquidity, security audits. Can we get pricing data from PIF? All of those things come into consideration when we look to accept a new market on Deepr.
Right. Yep. Makes a lot of sense to me. I mean, if you're having a collateral and it has to be liquidated to pay off the lender, and there is not enough liquidity to pay him back in full, then of course that will be, very detrimental to the protocol. So great to see that you are making a lot of considerations there to, keep everybody safe that is using the platform. Speaking on keeping everybody safe. So I thought up a scenario. I am currently supplying 100% of the IOTA in the pool, and somebody else is borrowing 100% of that. Now, given he is going to pay a hefty fee for maintaining that loan, but what would happen if I try to withdraw my collateral again from the pool while it is borrowed out by somebody else?
Of course, that's quite an unusual situation. I'll explain why it's unusual first, and then I'll explain what would happen. So it's unusual that you would have like one user just applying to a market. We see across Deepr that we have like hundreds of people supplying assets to a market, and we have hundreds of different borrowers of different tranches that are borrowing those assets with different amounts of we call it like health rating, depending on how much collateral they have against a debt position. So they would potentially get liquidated at different positions of the pricing. Under the scenario that you described, where you have one user that's applying 100% of the lended asset and another user borrowing 100% of the asset, I've never seen that happen on a lending and borrowing market, and I can't see it happening in the future. But under the scenario that you described, you wouldn't be able to redeem the amount of assets that you've lent. The flip side and the more positive side is that the person that's borrowing your assets is going to be paying an extreme APY. So you're going to be earning an incredible amount of money whilst you can't access your assets because there's too many people borrowing against the people that are lending. In practice, what would happen is that it's called a utilization rate. So under that scenario, it's at 100% utilization rate, which is very, very unusual within DeFi. And if that happens, two different scenarios are going to occur. In fact, there's three different scenarios that are going to occur. The first is that the APY that is being advertised for people to lend more assets to the market is going to be extreme. It's going to be in the thousands of %. And so you'll find that more people will lend their assets to that market, which would mean that you would then be able to redeem some of those assets. The other thing that would happen is that the people that are borrowing that position are highly incentivized to repay that position as soon as possible, because nobody wants to pay thousands of % to borrow an asset. And this is where the markets are variable. Unfortunately, like, I wish that Twitter allowed us to do like a video like screen share. But essentially, if you, I don't know, for those that are still within the dashboard, if you click on, say, USDC is a good example. So if you click on USDC, you can click on supply rates. And then in the supply rates, there's a chart in the bottom right-hand corner that shows the utilization rate. Currently, the utilization rate is at 34%, and borrowers have to pay 9%, and lenders get 2.4%. If we get up to 100%, borrowers are going to have to pay 45,000% APR, and lenders are going to get 13,000% APR, which is why it's unrealistic to think that we're going to get up to 100%, because the people that are borrowing are going to have to pay an extreme amount of APR. The third scenario is that if neither of those two scenarios play out, the person that's borrowing those assets, sooner or later they're going to get, well, sooner rather than later, they're going to get liquidated, because their debt position is going to increase with the amount of interest that they're paying. So the interest will get added to their debt position until they get liquidated. Hopefully that explains it. It can be really difficult to explain some of these concepts without a visual aid. And maybe what might be useful is we'll do another like tutorial with the audience, and we can actually run through this in Discord if that helps.
Yeah, absolutely. I think that was a very great explainer. I mean, the scenario as you described is, of course, highly unlikely. Nobody wants to pay 45,000% interest on, well, anything. And of course, if there is a incentive to deposit an asset and receive 10,000% APY, that is, of course, also going to change the dynamic quite a bit. So yeah, not really a concern here on my side. Yeah, let's move to the user questions, and Torkes, let's cover yours first. So the first question, yeah, sorry, go ahead.
To mention a couple of other things that we do to manage risk is we've been audited by 2 different audit firms with clean audits. We've been battle tested for some time now. So we launched initially on the Shimmer testnet well over a year ago. We then launched on top of Shimmer EVM, and we've now launched on top of IOTA EVM. We've got a really experienced team. The team behind Nakama is massive. It's growing all of the time. And I know that we're working on like several projects, but we have a dedicated team focused on Deepr, and that team is extremely knowledgeable on Solidity and Deepr. And we've had the experience of launching Deepr on top of Shimmer. We've also applied our learnings from operating on top of Shimmer, which has been really useful. We've dealt with events where Shimmer price has dropped like 70-80% in a day and increased by like multitudes in a day. We've handled liquidations extremely well. And so we've got that knowledge and experience now to, apply on top of IOTA EVM. We're a docs team. People can, come into our Discord and ask questions, and, we're very visible is what I'm trying to say. Another thing that we do to manage risk as well is that we've looked to launch the platform in a way which is manageable. So we've not let go of the reins completely. We've still had some control over like limits against, lending and borrowing to make sure that we're comfortable with the amount of liquidity on top of the ecosystem. We appreciate that the assets that we're accepting here are very liquid on centralized exchanges, but we also have to take into consideration the amount of liquidity within WAGMI and MagicC and soon to be pools once we launch our own balance of V2 DEX. So these are all things that we take into consideration when managing risk. We also have a dashboard where we're monitoring key positions, and we also have updates where essentially we have like API pools on anything that kind of looks untoward within the protocol. We're getting pinged within our Slack channel. So our team is very much on top of like managing and mitigating risk, and we've been doing this for a long time now.
Right. Yeah. Thanks for that addition. Yeah. So Torkes is asking, how can you ensure that the value of Deepr will be retained. And then let's take it one at a time.
Sure. I can never, I don't want to get too involved in like price speculation. I do appreciate that earlier I said that I'm optimistic on the price. I don't want to get too like drawn into price speculation. What I will focus on is that we're building and developing the Deepr application. We're yet to launch the other applications within the suite of Nakama, which are essentially going to add more value and synergies to the Deepr application. So, for example, Virtue, which is an over-collateralized stablecoin, over-collateralized stablecoin, we will be accepting in the future, once there's enough liquidity, that stablecoin as a market on top of Deepr. Once it has enough liquidity and it's very stable in the markets. And so all of these things are going to be adding value between each other. So we're not just like launching applications in isolation. We're looking at ways in which they can collaborate and partner, not just within the Nakama applications, but also within applications within the ecosystem. And I think all of that is going to add value, not just to Deepr, but to the ecosystem. And we're still very, new into the ecosystem, but Deepr has already obtained the number one position for liquidity in the IOTA EVM ecosystem. If you look at DeFi Llama, it's showing TVL of 2 million, but we are in discussions with DeFi Llama. I think we need to update an API. I'm just checking what we're at right now on our markets page. We're up to close to $3 million worth of liquidity, which is a really positive start. We've been launched now for just over a week. We've got close to $500,000 worth of borrowed positions. And this is all before we see some of the larger like liquidity incentives, which we're anticipating to come from the IOTA Foundation. I think everyone's aware that there was an increase in supply of IOTA roughly about a year ago. Part of that supply increase was to assist in having like a treasury fund that can be supporting ecosystems like this, as well as the build burn vote for the IOTA tokens that can also be used as liquidity incentives to not just support Deepr, but essentially support the entire ecosystem, which will benefit from indirectly.
Right. Yeah. Let's shuffle the questions around a little bit. I think it would make sense to ask you next if there are any plans to evolve beyond just a borrowing and lending platform.
No, but I think there's a lot that we can do for lending and borrowing platform. I think there's a lot more partnerships and collaborations and adoption that we can support. We are researching real world assets as well as, people that clearly look at my Twitter feed and the Nakama feed will see. And it's something that is of great interest to me. And I think in the future, if we can have real world assets and use that as a market as well as an asset that could be supported, I think that would be very valuable for a lending and borrowing platform. We just need to find a regulatory compliant manner in which we can do so. But if you can imagine right now, the most stable form of collateral that users can use are a stable coin, but in themselves that they're not really yielding any additional advantages. But if you could have an RWA, which is perhaps say like a T-bill token, then natively that's earning interest whilst being used as collateral, which can also then be earning interest and being used to secure a debt position. I think that would be very attractive, not just for DeFi users, but also for more traditional finance users that want to take those more traditional assets and provide more utility to them. Now, just to make it really clear, because I don't want people speculating, that's not to say that we're going to be launching RWAs on Deepr in the near future, because this all takes a lot of time, but it's something that I'm interested in researching and exploring the possibilities of doing so.
All right. Yeah. Thanks for that. And Torke's last question is whether you are planning to release a roadmap that is going to detail any additional assets, collateral types, and plans for staking and revenue sharing, anything of that sort.
Yeah, I think we can certainly have a roadmap. I think what might be useful in the interim is maybe if we just have a catch up session. We did a Discord tutorial did we do one? I'm sure we did. Maybe we haven't. Apologies. I've just come back from leave, so I'm not sure if the team's done I know we've got plans to do a Discord tutorial. I'm not sure if it's happened yet or not. If it hasn't, we'll look to do so soon, and we can talk through our plans for the sort of medium term with a sort of high level roadmap. I never like to give like exact dates because it's really difficult, but yeah, we can talk around our roadmap, not just for Deepr, but we can also discuss like in a bit more detail, like our roadmap for the other applications that we'll be launching, because they're all going to be operating really closely. So for example, we're launching, I mentioned Virtue with an over-collateralized stablecoin that could be, in the future used as a market within Deepr, but we're also launching Pools, which is a balance of V2 DEX. And then with that, we'll have greater control over liquidity of those markets that we're providing lending and borrowing positions. There might be opportunities to leverage on there. And also with Pools, we'll be able to control the liquidity of our own tokens more closely. And then we have a couple of other applications which I can't talk about too freely at the moment, but we hopefully will be discussing them very soon. In fact, yeah, very, very soon, over the next few weeks, that there should be some really positive news coming out of Nakama, and we can share more information on another application that we've been working on for over a year now.
Awesome. Sounds like the Lego bricks are going to be stacked. Torkis, thank you so much for your questions. Also want to shout him out. You can find him here in the listeners. If you choose to follow him, you can keep track of his adventures in, IOTA EVM, specifically Deepr as well. So if you want to track how it is doing live, then give Torkis a follow. All right. We just had somebody raise their hand. If you guys have any questions, then we'll happily get you on stage. Moving on though to Lombard's question, and that is, how do you plan to compete versus other lending markets?
So I don't want to draw too many comparisons to us and other lending markets. What I will say is, I'll say why I think we do a good job and why I think people should use Deepr. I think people should use Deepr because we've got a good track history within the IOTA community. We have 2 clean audits. We have ambitions for growing the platform and looking at innovative ways to do so with research with RWAs. We're a completely doxed team. We have token emissions which are not locked. And one thing I will say is, no one can guarantee the price of a token, but if you have locks on top of tokens, say like a 3-month lock or 6-month lock, it's even more difficult to guarantee or look at a price today when you're going to have a big token on lock in maybe 3 or 6 months time. I'd rather not have do direct comparisons between us and the competition. We also have a relatively simple and clean lending and borrowing market. It's not overly complicated. We've done this on purpose. We've got, specific, user interface, features such as Lighthouse to try and guide users to ensure that they don't take up heavily, risky positions. So yeah, I'd say our main selling points are that we've got a very clean, simple, lending and borrowing platform. We're growing. We're the largest, DeFi platform on top of IOTA EVM in terms of TVL right now. That's not to say we always will be, but right now we've had a really positive start. And we'll be looking to grow. It's also to bear in mind that we're looking to grow within the IOTA EVM space, but we also have the capacity to grow in other networks as well. So we've had experience of launching on top of Shimmer, now migrating to IOTA, and there's no reason why we can't support other networks in the future.
Awesome. Thanks for that. Let's take one of the questions here from the comments. IOTAnized. Wow, did a much better job pronouncing your name this time around. So he is basically wondering how many of the users of Deepr are currently from within the, let's say, IOTA bubble, and how many of those are, well, let's say external. And then following up, how do we attract more people from outside of our own bubble?
Yeah, brilliant question. I'd say the vast majority of our users, and this is going off my own hunch. We don't have we could maybe try and have a look at the data, because we could maybe see what users have interacted on top of Shimmer and then what users have interacted with on top of IOTA. You could do that through tracking EVM addresses. We haven't done that to date. So this is me kind of guessing. My educated guess would be that the vast majority of our users right now are within the IOTA community. I think trying to attract users from other networks it's not easy, and it has to be coordinated. And I think it has to happen at the right time. So we've had the launch of IOTA EVM, and I'm not just going to talk about Deepr. I'll talk about IOTA EVM because I think it applies to the whole network. IOTA EVM launched. We had the infrastructure in place relatively early on, which is really positive. And the infrastructure, which is really important, is that we've got Stargate V2, which doesn't rely on like a huge amount of liquidity on both ends, which is brilliant. We've got like PIF support. We've got, custody support coming in. We've got, 5 blocks of multi-sig wallets coming in soon. So this infrastructure is coming in. We've then had applications launched. So we've had like Magic C come in first, bring up a lot of liquidity. We've had, there's been WAGMI, there's been, Perp Dex. And so there's more applications coming on board. What we need now is kind of probably a coordinated approach around like timing to try and attract users from other ecosystems. And the positive thing that we got behind us this time around is that there's a significant ecosystem fund to support this. Another way that we can try and attract users from other networks is directly marketing to key opinion leaders in those networks, and or providing incentives. So you'll see right now, actually, within Deepr, if you compare the incentives that users are earning for borrowing and lending, they're significantly higher than lending and borrowing markets on top of other networks. But that's because we've only just launched on top of IOTA. So we need to try and attract specifically a large amount of Ethereum and USDC into the markets, which is why we're offering such large rewards on those markets. But once we become established and a bit more mature, those rates will come down. So that's an attractive APY for users and other networks. We just need to market it to them and make them aware of these opportunities and sell IOTA EVM as being, a mature community that is looking to, grow this ecosystem, which it's had a positive start. And if you look at, say, TVL on top of DeFi Llama over the last few weeks, you'll see that we are starting to see traction. So from the beginning of August, we had $750,000 worth of liquidity in the entire ecosystem, and it's been gradually growing now to over $5 million, which is positive. Like within the last month, it's like 6-7x. And so we need to keep up that positive momentum. We need to continue to attract liquidity from other ecosystems, and we need the support of the IOTA Foundation to work with us as teams to develop like marketing strategies. But it's still relatively early days because those big marketing campaigns still haven't come into play. And I'll leave Harry the spotlight to talk about that. Hopefully he can join a call soon and discuss what his plans are. Although they're probably top secret, probably 007 doesn't know either.
Yeah, almost had to kill the space here when you bring that up, but very fair points. And of course, also I want to mention that there are a lot of IOTA holders which are still somewhat sitting on the fence with deploying to the EVM. So I would say there is definitely some TVL that can still be sourced from the OG IOTA community. So it'll be very interesting to see how the hockey stick chart on DeFi Llama will keep on developing. All right. So the last question, 0x IOTA Bull. So how to prevent Deepr emissions from negatively affecting the price?
Good question. Ultimately, it comes down to the utility of the token. As I mentioned before, the team have 20% of the token emissions today. We haven't sold any. We've got confidence in the long-term viability of the project. And even through like the uncertainty of the Shimmer token price, I'd say that the Deepr token price has performed pretty well against something like Shimmer. Yes, we want to be performing, much better against USDC, but it's still above the fair launch price against USDC. And we now need to, build. Now that we've launched on top of IOTA EVM and we've had a successful start, we're not going to be stopping. We'll continue to make progress. We'll continue to work on other applications that are going to add value to Deepr. And yeah, it's just about, building. And if we continue to build and we can create a successful ecosystem, because it's not just about Deepr, it's about the wider ecosystem, then we'll see that across the Deepr token price, because the utility of Deepr, the more users, the more liquidity, the more borrowing positions, and the more fees that the platform will earn, and the more fees that we can share then ultimately with our users. So we do need to monitor the emissions, but it's for this short-term period, it might seem like really high emissions, but we need to attract additional liquidity into the platform so we can make it a long-term success. And that long-term success is, sharing revenue from the platform with token holders in one way or another. But we can't do that unless we've got the initial liquidity that we can attract with some of these higher rates of returns in Deepr.
All right.
Just to reiterate, I think I mentioned it earlier, but like our sort of medium-term plan is that, we have these short-term higher emissions, and there might be a period of time when we do like a campaign where we're attracting more people from other ecosystems, and we might boost those emissions, but it's likely to be over like a shorter period, and then we'll drop them back down to a more sustainable emission rate in comparison to the amount of USD value that users can retrieve from fees on the platform.
Yeah, sensible approach there. All right, I think we basically covered everything here in my document and all of the user questions. So thanks again to everybody asking questions, is making these spaces so much more fun for sure. Rob, so any closing thoughts, any way that we can support you Deepr as a community? What is the best way to reach out? Anything of that sort, please?
Yeah, I guess the best way to support us would be to follow us on Twitter, join our Discord, ask questions, get involved. If you're not familiar with lending and borrowing markets, the best approach I would give is, like, if you haven't got involved in DeFi so far, just like get involved a little bit. Like, you can learn just without, putting your money at risk. But if you put, say, $2 at risk, you're not going to lose much, but you'll end up learning a lot more because you've got skin in the game. So my advice would be invest a little bit that you can afford to lose, play about in the markets, and don't put too much money at risk until you understand how the markets work. We have put out some learning material on top of Medium, so you can check that out. But yeah, just ask questions. There really are no silly questions, and we'll be happy to answer them on Discord.
Awesome. Thank you so much, Rob. So I think that brings us to the end. I definitely have to mention here that this episode of Buildsphere, as usual, has been for informational purposes only. And with that, thanks again to everybody tuning in. Thanks for everybody asking questions, especially, and big thanks to you, Rob. Great to have you on. And yeah, we'll be keeping tabs on Deepr, and yeah, hopefully we can get together on a Buildsphere rather soon again.
Awesome. Thanks, everybody. And again, yeah, I really appreciate all the questions. And if anyone has any further questions, jump into our Discord and we'll look to answer them soon. Thanks again, Jonathan. Adios.
My pleasure. Have a great day, rest of the day, everybody, and see you on Discord. Bye-bye.
Bye.